is a junior mining company that focuses on high-grade, low-cost mining opportunities. So with me to explain a little bit more about this is CEO Murray Nye and also Joe Carrabba, the executive chairman of Winston Gold. So great to have you here.
Thank you very much.
So Murray, let's start with you. What is the history of your involvement in this project and in the gold industry?
Well, it goes back to 2005. Gold hadn't moved probably in 30 years. It was priced around $400. I had a very good friend of mine in the mining business. I thought maybe it's a good opportunity to look at gold projects right now because of the printing of currencies and the financial uncertainty in the world. Even at that time, that was 2005. It's gotten a lot worse since then, but I thought there was an opportunity there, and I asked this gentleman, Mike Gunsinger, if he would help us find a gold project, which we did in 2005, and put another similar situation to this into production back at that time. In 2010, we had it in production at the rate of 400 tons a day at 0.4 ounces per ton, producing roughly 160 ounces of gold a day. We came back in 2014 and acquired this project. We leased the property from the owner, and we have a geologist by the name of Ben Porterfield. I call Ben like the Sherlock Holmes of geology. He seems to find data and information that very few people have access to. He's got access to old archives and universities. So he found out there was a good history on this property going back to the turn of the last century, about 1890. And it was a very high grade gold mine that they mined consecutively for about a distance of 2,400 feet. And at that time, it was one of the longest veins in the world. And there were 700 and some odd drill holes into this done between 1985 and 95. So there was a lot of valuable data that we acquired along with the project, Jane. And so that's how we got involved in, with Joe's help, we've brought this project on stream. We're very close to putting it into production.
Yes, gold is certainly getting a lot of interest these days with all the Fed spending and uncertainty going on in the world. So Joe, what about you? What's your history with gold and with this project in particular?
Well, I've been in the industry my entire working life. I'm a geologist with an MBA, worked for a number of very good companies from coal to gold all the way through. I was on the Newmont board for 9 years, and I ran the chaired the sustainability and operations and environmental committee. So had a very good knowledge and a lot of good people around the Newmont management team to really get me into the gold industry from there. So I retired from the board last July after the conclusion of the Gold Corp merger, and really wanted to focus on the junior gold space. I think there's some real synergies that can be added there in the industry and bring it from the drill bit to production, which, as you know, we're about to do, and that's pretty uncommon for a junior mining company. So
can you explain real quickly junior mining and how is that different versus like a Newmont mining company and what they're doing?
Well, as you know, Newmont is listed on all the major exchanges. It's the largest gold company in the world with it. And along with that brings, they can take different risk opportunities in many of the developing countries around the world. They're looking for very, very large opportunities of a company of this size to move forward with. And their budgets obviously are extremely large to move a company forward. In the junior space, it's just as Murray said, it starts with an opportunity, almost a dream, and then a lot of reality of hard work to kind of scratch and claw to get your way through to where we are today. A lot of it is fundraising from individuals. There's not a lot of institutional backing when you start with a very small company like this. And then you've got to perform. It's small teams. The teamwork has to be just excellent. You've got to have good technical people on the ground, which we do. And then to keep your shareholders involved in this, because they're taking a high risk too, you really have to hit your milestones and perform. So it's quite a different beast, if you will, from the large companies I'm used to, where I worked for Rio Tinto for 22 years. So, I was used to very large companies with lots of support. And here you get right back to sometimes myself where I was in the beginning, and I'm enjoying every bit of it. But that's the difference. It's getting your hands back in the dirt, if you will, and really making it happen.
It sounds much more entrepreneurial than working for one of the big companies.
Oh,
Like
totally. And
starting your
this
business, yeah.
total startup mentality, entrepreneurial. Yeah, a lot of long days and long nights. Murray and his group have just slugged through this thing for years and years. And it's amazing for me to watch their resilience and how this thing is coming into fruition. They've done a hell of a job.
So Murray, let's talk about gold and just kind of the macro. Like I mentioned, it's getting a lot of attention. The world seems scarier and more uncertain than it ever has in my lifetime, even during 9/11. I mean, and plus all this government spending that's going on. So what's your opinion of the global economic market?
Well, I think it's a mess. I think it's obvious that it's a mess. And I just don't know how they're going to get out of it. Right now they're trying to spend their way out of it. And then you've got a lot of uncertainty in the world because of COVID and all the jobs at risk. I know in our country, in Canada, they've just put a lot of enforcement measures in to prevent people from moving around. But, that being said, gold historically has always been a currency. And it's always been a store of value. So it's very portable. It's easy to maintain. There's a liquid market for it all the time. So I remember watching an interview with Ray Dalio back about a year ago, and he was saying cash is trash, and this was even before COVID or any of this other stuff that was happening. And he wasn't a big gold bug per se, but he certainly thought it was worth looking at as far as, maybe putting 10% of your portfolio into gold. But historically, it's always been a store of value and a currency. So, I think it's a good hedge against inflation. And I'm old enough to remember, you aren't, Jane, but I remember the hyperinflation back in 1979-80, where interest rates went to 20%. And this is what this is what the world is poised for. Again, I believe. I don't know when it's going to happen, but you're going to have inflation at some point.
Yeah. Well, I grew up on a farm and I remember my dad talking about that time and what the interest rates were. So I certainly kind of through osmosis listen to him. So Joe, I mean, what do you have anything to add to Murray and your thoughts about the global macroeconomic?
Well, I think just to support that, Jane, Warren Buffett, who was always extremely negative on gold, all of a sudden in the last month or so has bought in very large into Barrick. So as you can see, he went into the supply chain in gold. He went where we are. He went to the mining side of it. So he must see that as the biggest opportunity for investment in gold rather than buying just bullion, if you will, or going into an ETF. If you look at the World Gold Council's website as well, you see the inflows. They track it very well. The inflows going into central banks, particularly banks that they're very concerned about hyperinflation in their currencies. They're looking for something to support it with. And I think that's another telltale sign of what their economists are looking at as well as what's to come. Here in the U.S., as you know, finally, I guess we're getting through the election, but with all that uncertainty, forbearance is in place right now, so that's blocking all the foreclosure work that needs to be done. And again, for all the poor folks that have been caught in this thing, no cause of their own that goes with it. But nevertheless, when the political situation is cleared here in the new year, somewhere along the line, they're going to have to release the banks, the mortgage holders, the auto loans, and all those. And I think we're in for another financial crisis that goes with it. The folks that see that, I know the people that we're talking to are trying to turn part of their portfolio into gold right now. And it doesn't look good, unfortunately, for the world, but that's when gold tends to shine, if you will, pardon the pun.
Yeah. So let's talk about this current project. So Murray, it's in Montana, right, where you are. So tell me about this project.
Yeah, it's located near the state capital of Helena, and it's about a 25-mile drive on a major highway in the state, so it's got good access. We like Montana because the permitting here is reasonable. It's not a gimme, but as long as you follow the rules and guidelines and keep everything on track as far as what you're doing at the mine site, the permitting process here is very reasonable. So it's a good place to operate. There's a really good workforce in the area. Montana has a rich mining history. Former Governor Brian Schweitzer in the state, told us a lot about the history of the Drumlummen mine, which we were operating with, as well as the history of this area. So it's a good place to operate. The United States is a very safe jurisdiction to be in. I think there's a lot of uncertainty in the world in some of these jurisdictions even. You know, if you have a gold project, say in some of these countries that could be nationalized, or I think there's a lot of risk in where you have these things located. So I think Canada, the United States, and Australia are the three, you know, probably the three best jurisdictions to operate in the world right now. Not to take anything away from other countries, but it's just, I think that is a risk that you want to mitigate if at all possible. So that's why we like Montana.
Okay. And Joe, could you weigh in on the financial situation of the company and what might be your forecast going forward?
Yeah, sure. So we've paid our bills as we've moved forward through this. We started the development of the mine about 18 months ago. We weren't fully funded, but we just felt the time was right to start. Now, gold at that time was still in that $1,100-$1,200 range. We didn't have a crystal ball that saw where the pricing was going to go, but the project held up financially at $1,100 as well, and that's what again got me really intrigued to get involved with this. So it's got a nice high grade that goes with it, 0.3 to 0.4 ounces per ton on average, with 2 ounces of silver that goes with it. The costs are very much in line with competitors. If you were to benchmark this, you know, we're around $900, $950 an ounce, all in sustaining costs that goes with it. So the company financially, as small as it is, we do have some cash on the balance sheet. We're continue to raise a little more cash until we get into a positive cash flow when we start first production later this month or early in December that goes with it. So financially, we're about as good a shape as you could be in, Jane, for a small company with this, going into this with no debt. We bought all of our capital equipment, the mobile equipment for the mine that we need. We've leased the mill from a group out of Salt Lake City, and we've put about $200,000 into it to get it up ready to go and really get it razor sharp so that we get the best recoveries that we can. And we've really hired a fantastic staff from the mining engineer. The geologist is a former Barrick employee. The mill superintendent came from Sarbanes-Stillwater up the road, the platinum palladium producers. So yeah, we're in good shape, and we're looking forward to getting the cash flow coming with first concentrate.
Okay. And then Murray, final question for you. I mean, there was a recent press release that said that you intersected more high-grade gold in the parallel line. Explain what that means for non-gold.
Okay. Yeah, I will. Happy to, Jane. It's the parallel vein, actually. Okay. It's
okay.
Okay, the gold is hosted in what are called veins, and the vein is a different form of it's a different geological setting than the host rock. The veins contain the gold, and we're currently developing the parallel vein on the level we're on now. And then what happened was, with these last two drill holes, is we've intersected some very much higher grade than we're on the level we're on right now. Like the level we're on right now is running about a 0.3 ounces per ton. The last drill intercept was 1.5 ounces per ton over 5 feet. So that's a significant increase in grade, like 5 times the grade that we're on. So what that means is that, you know, we can produce a lot more ounces on that level. We also have, it's not too far away from where we are now. It's about 80 feet in front of us and roughly 40 or 50 feet below us. So it's not going to be that long to get to it. Also, there's another drill hole, maybe about 80 feet lower than that intercepted some similar grade, about 0.6 ounces per ton. And it's 300 feet ahead of the other one. So there's some good strike length to that. And there's some very high grade material right below our feet, if you like, that we can get to mining in the not too distant future.
Well, thank you, Murray and Joe, for explaining gold and Winston Gold. Sure. And I think could be a very interesting thing to watch over the next few years. So good luck.
Thanks, Jane, to you and your audience. We appreciate your time very much.
Thank you.